Welcome into the channel, folks. We got a few things to discuss here today. Rivian stock was up huge in the session here today, up 8.6%. It's up over 32 percentage points after hours. Somebody knew something. We're going to discuss what's going on here with Rivian and if I think it's good or not so good, okay? Then I want to discuss housing market to remain stuck until at least 2026, says Bank of America. I want to share my perspective and opinions on that. Tesla just issued a recall. I also have some great news for Tesla shareholders in this video. If you're a fellow Tesla bull, yeah, definitely got something for you in this video here today. We're going to speak about Honest stock. The stock's up 51% in the past year. It's up 4.8 percentage points here today. We'll talk about why it's up and why there's such a pretty insane potential upside over the next 24 to 36 months with Honest specifically. And then to close out the video, we're going to get into the public count a little bit. The portfolio as of today is about $2.16 million. And this is a portfolio that's kind of a little stuck here over the last few months, I feel like, kind of in that $2 million to $2.2 million range. We'll speak about like when I expect the next major move to happen here in regards to public count, okay? Appreciate y'all joining me as always. All I need from you right now is to make sure you're subscribed to the channel. Make sure you're subscribed. If you're watching on your phone, your tablet, your computer, whatever, make sure you're subscribed here to the channel if you're not already. And then the pinned comment down there today will be if an application if you're looking to apply to join my private group, which is access to all my premium courses, as well as a 6 and 7 figure Discord chat, exclusive weekly videos from me, plus ability to see all the moves I'm making each week in my $2 million plus Fidelity account. Okay, what do you got? So first off, with the Rivian situation, Volkswagen plans to invest up to $5 billion in the electric vehicle startup, Rivian, which Rivian's been around so long now. Can we really still call it a startup? Like, come on, man. Like, that's got a, like, you know, kind of like life. You aren't always called a baby or an infant or a toddler. You like move on. Like, come on. Like, Rivian's got to stand on its own 2 feet at some point, right? Starting with an initial investment of $1 billion. The additional $4 billion is expected to be invested following the establishment of a joint venture, JV, according to the joint releases by the automakers Tuesday. Shares of Rivian soared more than 30% after hours trading on Tuesday, 2 days ahead of an investor event for Rivian. Now, what's my view on this for Rivian and for Volkswagen specifically, okay? And by the way, I'm actually kind of an indirect investor of Rivian because I own Amazon. Amazon owns a ton of Rivian, okay? So my view on this is the following. This is a win-win situation for both of these companies. I do not look at this and say Volkswagen's getting the best of this deal. I don't look at this and say Rivian's getting the best of this deal. Each of these companies actually needs each other really bad, and I don't think either one is really benefiting more than the other, and I think this is very vital for both companies. Let me explain why. If you look at Volkswagen and you look at their market share of EVs, global battery electric vehicles, right? 4.6% last year. Now, that might seem like, oh, that's actually pretty decent. Like, they're hanging up there pretty good. Like, if you compare them to GM and Ford and companies like that, it looks like they're doing terrific. But that's not actually good. It's really, really bad for Volkswagen, and here's why. Volkswagen is one of the 2 big giants in the auto industry. And you can say there's a lot of big companies, but at the end of the day, when you talk about the biggest of the bigs, you're talking about Toyota and you're talking about VW, okay? These are the giants. And so when it comes to Volkswagen, this company has to get EV sales in a way better place than they're at right now. What they're doing is simply not good enough. And the management team at VW, they understand this. And that's why they're making a JV in this situation, because they understand if they're only going to capture 4.6% of the battery electric vehicle market long term, they're going to be in deep water. They need to become a giant in this industry, right? And think about it. Like, if you have the viewpoint I have, which is, over the next decade, essentially, all vehicle sales will eventually go to EVs, right? Well, guess what? This 8.8 million is going to shrink to 8.6 and 8.2 and 7.5 and 6.3 and 4 and 3, and it's going to shrink over the coming years, internal combustion engine sales, right? So they've got to get EV sales going. Now, for Rivian, they need VW as well. If you look at Rivian's financials, it's a dumpster fire. 2019, they lost almost $500 million. In 2020, they eclipsed the $1 billion plus loss on the bottom line. 2021, $4.6 billion loss. 2022, $6.7 billion loss. In this past year, they lost over $1 billion every 3 months. So, Technically, you could run the math on this. They lost over $400 million a month on the bottom line. Like, that seems like a hard challenge. Over $400 million per month you lose? That's crazy. This company was losing. Are you kidding me? They were losing over $100 million a week. This is the math on that. They were losing over $100 million a week. How is that even possible? That's ridiculous, right? And they've done that, for the last 2 years. They've lost over $100 million a week. What? It's insane. Like, that just hit me right now. Like, oh my gosh, like that's a crazy number. So, clear as day, Rivian needs financial help. And here's the next problem for Rivian, and this is a pretty big problem, is as of right now, at least, they do not have a mass market vehicle. I like actually both Rivian's vehicles. If Tesla didn't exist, I would probably drive Rivians. Like, I like those vehicles. But with that being said, those are not mass market vehicles. Rivian, if they want to become a major player in the auto market over this next 3 to 5 years, they've got to have several mass market vehicles. They got to have their Model 3. They got to have their Model Y. Like something that sells huge volume if this company's ever going to become a profitable company, stand on its own 2 feet. VW understands almost, probably as well as anybody on how to make vehicles very profitably, right? They might not understand when it comes to EVs, and that's where this kind of leveraging with Rivian and Rivian's technology can help. But the two together, they need each other. VW needs the electric technology and get to much higher levels, and Rivian needs to learn how to make some flip and flapjack and money because they're clueless when it comes to that, right? So both of these companies really need each other heavily. That's why I call it a win-win. Now, in the short term, Rivian stock could easily go to $20 to $30. And now, am I going to go play Rivian stock from a short-term perspective, knowing that it's probably going to 20 to 30 in the short term? No, I have no interest in that. But I understand for a lot of short-term speculators, they'll be playing the stock and they'll probably make pretty good money. For the next little short bit of time here. And then obviously over the long term, if we're talking, years out and a year out and many years out, right, that Rivian's success will really be predicated upon if they can get to their Model 3 day, their Model Y day, and really get those to scale in a massive way and start selling, hundreds of thousands of vehicles, millions of vehicles. That's what they got to get to, right? So we'll see, but at the end of the day, good move by both these companies. Very, very intelligent. Housing markets remain stuck until at least 2026, Bank of America says, okay? So if you haven't been tracking the housing market, mortgage applications are near pretty much all-time lows. I mean, it's a disaster out there in terms of mortgage applications, right? And this doesn't come as a surprise. I mean, really the last 2 years have been brutal for the housing market, but specifically things have far worsened really over the past 12 to 18 months. If we really want to get, down the nitty-gritty here. Mortgage applications, I mean, you just got to think, like, who's really buying out there? It's very few and far between in terms of people that, the only people that are buying are the people that absolutely feel like they have no choice but to buy. And that's really about it in this market, right? Now, meanwhile, you hear news about this coming out here today. U.S. home prices smashed another record high in April. I understand it's, the end of June and we're finally getting April numbers, but these numbers always lag. But you got mortgage applications near all-time lows. You have home prices at all-time highs, and it creates a very problematic market, okay? Now, here's the deal. Here's what needs to happen to unstick this housing market and get things moving, okay? If you look at the 30-year, if we look at the past 15 years, which that's all that really matters, where mortgage rates were 40 years ago is irrelevant because no one still has a mortgage from 40 years ago. Okay, what matters over the past 15 years is what matters because people have been programmed the last 15 years on where mortgage rates should actually be. And if you've been programmed the last 15 years, where should mortgage rates be? 3 to 5%. The problem is mortgage rates have been significantly above that over the last couple of years, and they remain significantly above that range. So in order to get the housing market back moving again, we have to get mortgage rates back to under 5%, okay? If you're really going to talk about getting the housing market moving. If you got mortgage rates at 7%, you're just in a stagnant market unless we just remain at 7% for the next 15 years, right? Or let's just call it the next 13 years. Then everybody becomes like programmed that it's like, okay, just 7% is what you pay. which would just cause the housing market to freeze for many, many more years until it became so ingrained into people's thinking process of like, oh, we're paying 7% now. Like that's just the way it is, right? Now, here's my thought on when mortgage rates are going to go down. Okay, so and when I say down, I'm talking in a significant way. The Fed's likely, and it's not for sure, but they're likely going to start lowering rates at some point, I would say sometime between September and November. I think there's a pretty decent probability we get a 25 basis point cut, but it's certainly not a guarantee. If we keep having CPI come in the threes, we're not getting there. We need consecutive months in the twos for the Fed to feel comfortable to cut, in my personal opinion. So let's say we get that 25 basis points sometime between September and November. Okay. Well, then we've started. That will be the point where we've officially started the let's call it the rate cut cycle by the Fed. Right now, the important thing to understand about when the Fed is lowering rates or raising rates, it doesn't necessarily make mortgage rates go up or down directly, but indirectly it does. So if the Fed all of a sudden dropped rates to zero tomorrow, and basically over the next several months, mortgage rates would plummet down to like the threes essentially. Okay, and so it just there's an indirect correlation between where the Fed has interest rates and where all rates are at. Mortgage rates, car loan rates, credit card rates. It affects all those. Okay, so here's the deal. We're probably going to be at about, we can call it about 5% on a Fed funds rate in January 2025, right? Then let's say the Fed cuts quarter after quarter after quarter throughout 2025. So then we're probably at a 4, somewhere around 4% Fed funds rate at the end of 2025. And then, so that would put us likely in the threes in 2026, right? And if we're in the threes for Fed funds rate, then mortgage rates would be, I would say they would probably be right around 5% at that particular time. You could get a mortgage for 5% or so. And that would be a moment in which I think the housing market would definitely come back alive there, which once again, kind of goes with what Bank of America is saying here, where they're talking about, the housing market's going to be frozen until 2026. It's definitely a possibility. Now, the one thing that could mess up all of this, though, I will say, is a big recession. If a big recession happens, we get a big unemployment cycle. Throw all that out. The Fed will lower rates down to 1% or 0, like quick. But assuming there's no big recession and the economy just continues to go along, maybe it's not a booming economy, but it's also not a crashing economy, then this will probably be something we look like. And so, yeah, I'm actually in agreement with Bank of America. I think, housing market is probably in a frozen state until 2026, outside of something huge happening in the economy really bad, right? Now, in terms of Tesla recalls Cybertruck to fix faulty windshield wipers and loose trim. Now, this makes headlines everywhere, right? It always makes Tesla look bad. Anytime anything bad happens with Tesla, you see the headlines everywhere. Every single major media outlet covers it. Everybody looks at it, right? And at the end of the day, it's a recall. Guess who else has a recall? Every single other automaker, all the flip and flapjack in time, they all have recalls. If you ever own another vehicle, you know how many times recalls. GM's always doing recalls, and Ford and VW and all these guys, right? It's part of the process. Welcome to the automobile market. And when you launch a new vehicle, the chances you're going to have recalls is actually substantially higher because there's so many new things that could go wrong because it's a new vehicle. The best case scenario is you have a vehicle in the market that you hardly make any changes to. You maybe let's change just a little bit the way the front lights work and the tail lights work, and it's just a few little things, but you've really been selling that car for 15, 20 years, right? Think of a Toyota Corolla. Think about a Toyota Camry, like vehicles like that come to mind where it's like, a Volkswagen Jetta. They've been in the market so long, they'll make small little tweaks here and there, but it's basically kind of the same vehicle year after year after year. When you launch a brand new vehicle you never sold, you're gonna have problems. Welcome to the automobile market. That's what happens, right? But once again, Tesla blows up in a big story. Now, great news for Tesla here. This is great news, okay? So, we haven't even ramped Cybertruck yet. It is slowly ramping, but in terms of if you're expecting how much have Cybertruck really helped the numbers, it really hasn't helped the numbers at all. Elon Musk automaker has issued a recall for 11,688 units of the Cybertruck, which first went out for delivery in November 2023, which means, right, when they do one of these recalls, it's not going to be nearly as costly to Tesla. But two, The real ramp's still coming for Cybertruck in terms of the big numbers and in terms of really positively affecting Tesla numbers. So as I've always said with Cybertruck, I'm expecting volume ramp in the second half of the year and then continued into 2025, right? And by the time we get to 2026, like Cybertruck's going to be doing huge numbers quarter after quarter. And by that time, they'll likely have a 60K Cybertruck in the market that's going to be doing very, very well. But that might not even be the best news. This might be better news here. Tesla insurance registrations in China totaled 17,400 for the week of June 17, 2017 through the 23rd, marking a 49% increase from the 11,700 the previous week, according to data by this EV Post. Vehicle registrations in China tend to be slower at the beginning of each month before picking up toward the end of each month, according to local reports. With just 1 week left in the second quarter, Tesla China insurance registrations are up around 14% compared to the seasonally slow first quarter, but down about 7% from the same time period, 2023. So the good news is it seems, and we can't get too excited, but the good news is it seems like the China business for Tesla is starting to pick up a little bit. Okay, which is what we want to see. We want to see the China numbers bottom, and then we want to see these numbers start to get better and better and better. And so the fact that we're up 49% versus a previous week, I would say, welcomed news. Very, very welcomed news. We need Tesla's China business to bottom out and pick up. And so, this is the early signs, I would call this the early signs of Tesla's business in China getting much better. And so I'm definitely very, very happy about that. Now, if you know me, continuously I've said I think the Tesla story gets better in the second half and then into 2025. I've been saying that for 6 to 9 months. The first half of the year sucks. A lot of, I knew this was going to happen. A lot of bad news, bad margins, bad delivery numbers, and just bad stuff across the board, just everywhere you turn. But the story gets better and better in the second half, in my opinion. We'll see margins start to improve in the back half of the year. I think we'll start to see deliveries improve in the back half of the year, production start to improve in the back half of the year, and then things will take another leg up in 2025 in terms of things getting better. So Tesla, you got to go through the tough times. And the good news is the tough times for Tesla, in my opinion, are about over. And so that's the first time I could say that in years. I expected Tesla to have a rough go, and they had a rough go, but things are getting better. Okay, Honest company. So Honest up 4.8% here today, up 51% in the past year. Okay, so what happened here, and kind of what's my opinion, and what's kind of the huge opportunity here with Honest in terms of stock price appreciation over the next few years. So Honest rallies after Loop Capital upgrades it on its growth potential. Now I don't know why the heck this photo is being shown here. Neither one of these individuals has to do with the company anymore. Jessica Alba no longer works for Honest. And in terms of Nick, the guy that was running the company into the ground, the financials into the ground, thank goodness he doesn't have anything to do with the company anymore, because if he did, this wouldn't even be a public company anymore. They'd be bankrupt by now, okay? Honest Company rallied Tuesday after Loop Capital upgraded the retailer, it's not even a retailer, but whatever, the company, to a buy rating from a hold. Analyst Laura noted that shares of Honest have declined 26% this year, despite healthy Q1 sales growth, profitability improvements, and a solid balance sheet. Looking ahead, the analyst and her team think continued growth will be sufficient catalyst for the stock as it moves throughout the year. Notable price increases are flowing through now on a year-over-year basis at Honest, plays catch up to industry inflation. Honest incremental price increases are seen driving sales 2% higher before unit growth is even factored in. That leaves Loop Capital confident that there's upside to the consensus mark on Honest. Ooh, okay. Now also, if you look at this here, okay, this shows you Honest and kind of their earnings beats or misses, surprise or disappointments over the last few years, right? Now what you're going to see is a whole bunch of very bad surprises where the company missed, and that's why I said Nick, the guy that was running the company, clearly was running the company into the ground, the financials, and it was so disappointing. It was disheartening what he was doing with that company. But I mean, look at this, miss, right? Then Carla takes over the show, right? And right off the bat, big improvement there. And then, right, they start beating. Huge beat here, 22% surprise to the upside. Right here, they came in line, and then the latest quarter, 88% surprise to the upside. So overall, in regards to Honest, everything's heading in the right direction here. Now, the stock has ridiculous upside ahead, okay? Now, in terms of the revenue growth, one is I think they could definitely beat these numbers that analysts have in general, right? And what we're looking at right now is 1000xstocks.com, and this is kind of taking into account what the analyst averages are, right? Now, this is very important to look down here. Look at the trailing 12-month price-to-sales ratio on Honest. Look at the forward price-to-sales ratio. Now, I want to compare them versus, peer-type companies. So if you're going to compare them to other companies, you have to compare them to like a Procter & Gamble and a Kimberly-Clark, right? And price-to-sales ratio is phenomenal to compare these companies to because Honest is just starting to get to profitability. So comparing on a P basis is not going to work for an Honest versus a Procter & Gamble versus Kimberly-Clark. You got to compare them on price-to-sales ratios, okay? Now, if we look at, obviously, Honest versus their peers, Procter & Gamble, Kimberly-Clark, Honest is faster growth, right? They should grow their revenue and earnings per share at a much more rapid clip than Procter & Gamble and Kimberly-Clark. But what matters significantly here is the price-to-sales ratio. So if we look, Honest's price-to-sales ratio on a trailing 12-month basis, 0.71, incredibly low. Procter & Gamble's at 4.68. That's over 6x where Honest is at, right? And then you look at Kimberly-Clark. Kimberly-Clark's at 2.31, right? And Procter & Gamble's the much better comp, in my opinion, than Kimberly-Clark. But the moral of the story is Honest's price-to-sales ratio is insanely low. Not like a little low compared to their peers. It's like off a cliff low, right? And I understand it getting like that when there was questions about if Honest was going to go BK or not, right? If we go back 18 months ago, or even 12 months ago, but that's no longer a question. So it should not be trading at that sort of discount now at this point in time. So if I look at Honest, this stock's going to likely 3x or more just off valuation over this next 24 to 36 months, in my opinion. That's a 3x just off valuation, right? But the best case is this stock could 10x to about $25 a share in the next 36 months. And in order to talk about a stock 2xing, 5xing, 10xing, you have to have a thesis that makes sense on how we get there. And I'm going to take you through right now my thesis on how it could actually, have some pretty insane upside over this next 36 months specifically, right? So when we look at Honest here, right, the company trades at about, we can call the market cap about $250 million market cap on Honest, right? I have this company in 2027 doing somewhere roughly around $500 million of revenue. Okay, maybe it's like more toward like a 475, maybe it's more toward a 525, 550, but we're just going to go with a ballpark of about 500 mil, right? Now, if Honest can get their net margins to a place where Procter & Gamble's at over the coming years, which I actually don't think is a stretch over this next 3 years. When I look at how much Carla has improved the gross margins, you got to understand their gross margins went from like 25% to 36, 37%, like snap of fingers quick, right? When I look at how quickly Carla is improving the margins on this, I have no doubt in my head, and when I look at how much she's keeping costs down, I have no doubt that they could get to somewhere around a net margin of Procter & Gamble's level in the next few years, especially when you consider they're a higher price point product in general, right? Which, we're talking, once again, Procter & Gamble's a 6x plus just off price to sales ratio, right? Now, if the company's doing around $500 million in revenue and they can get to about a 20% net margin over the next 3 years, that means they're going to be doing about $100 million of net income. Now, if they're doing about $100 million of net income 3 years from now, and you want to put a 25 PE ratio on that, that's a $2.5 billion market cap, that's a 10x. Now, when I put it to you like that, it's actually not that crazy to see how this sleepy stock 10x's in the next 3 years, right? You might think, okay, is a 25 PE ratio about right if Honest was doing $100 million in net income, right? Well, it's right on. Look at Procter & Gamble's trailing 12-month PE, it's a 26. Look at Procter & Gamble's forward PE, it's a 24. So if this company gets to a stage 3 years out where they're doing $100 million of net income, then there's no doubt in my mind at all that they should command a 25 PE ratio, which is $2.5 billion market cap, and we get a 10x on that baby, right? So that makes Honest very, very, very compelling, right? Now, I kind of look at Honest, and I've always thought about this company as kind of being my next elf. And for a while there, especially toward the end of 22 and into the beginning of 23, I thought, man, maybe this isn't going to be my next elf because the guy was running the company into the ground. Unfortunately, right? A bad CEO can do a lot of damage to the company. And Nick definitely did that. But then now that Carly's taken over this company, I have a lot more faith, seeing how much she's improving the financials in just 1 year. I'm like, give Carla 4 years. Where's the financials this company going to be, right? So Elf obviously has returned me a ridiculous amount in the public count over time, right? 2,767%. But if somebody's not ready to jump in Honest right now, it's fine. And I understand that, right? Like when I bought Elf back in the day, it was in a more precarious situation, right? And I actually think Honest is in a safer situation right now than Elf was when I was buying that stock many years ago, right? But I understand if somebody doesn't want to buy Honest. And here's why, right? You have plenty of time to jump in as the financials improve over time. Now, you can't get the insane return if you let things play out more, right? My cost base on Elf is $7 and something, right? But let's say you waited on Elf until their financials improved a lot and you bought it when it was at $20. Okay, you still got a ridiculous, like $20 to $200 was still a 10x. You could have waited till the stock was at $30, right? When the financials had improved even a lot more. And yeah, did you get from 7 to 30? No, but you still got a 30 to 200. Right? And so that's a beautiful thing with a company like this. You don't have to buy it now. You can always keep an eye on Honest. And then if you like where the business model is headed and you like where those financials are headed, there's always time to jump in down the road, right? Your gain's not going to stay as insane if they do actually pull it off and they actually do it, right? But there's still going to be a lot of upside there, right? And don't be surprised if people that are buying Elf at 208 are still going to make money and the stock goes to 400, right? Or they do a split at some point in time. Maybe that's the next play for Elf. Maybe they're going to do a split. So that's a little food for thought in regards to that. Also, Honest fits into the category of put me to sleep companies, right? And these are the companies, I understand most people in the stock market that are investing in individual stocks, they're men. 90% of the people that watch my channel are men. Only 10% are females. And so a lot of men don't give these sorts of more female-related companies time of the day, right? The Elfs, the Lululemons, the Ultas, right? Honest might be up next, right? Because they can't relate to it. They're like, they sell makeup products, they sell diapers, and they sell baby wipes and stuff like that. I don't know. And so I understand it. Like, I get it, right? But these put me to sleep companies can return unbelievable over time, right? You saw Elf. Lululemon's returns over the years have been tremendous. Ulta's always been a great stock, actually, until very recently. Ulta's actually had some troubles with their stock very recently, but outside of that little time period we're going through right now, Ulta's been a tremendous stock over the last 5, 10, 15 years. So don't fall asleep on these sorts of companies. Don't think every stock you got to buy is some AI stock, some tech stock. There's a lot of opportunities in the market. There's a lot of stocks out there that might not relate to you the best that are actually huge opportunities. And sometimes you just got to do a little research into those companies, right? Now, the public account, the account is stuck. We can call it kind of like the housing market. And it just seems like, when's this account going to break out to the upside, and go to 2.2 million plus and had that next big move, right? And I've been thinking about this a little bit recently because it does kind of feel like for the last 5 months or so, the account does seem kind of frozen in time, right? But here's the thing you got to kind of understand, this way you got to think about your portfolio also, is where are your biggest positions, right? So if I look at the public account, I have many different positions in that portfolio, right? I own a lot of different stocks. I own different hedges. I own some speculative stock. I own a good mixture of a lot of things. But at the end of the day, there's really 6 stocks that are my big 6, I call them. Those are Palantir, PayPal, Amazon, Elf, Tesla, and Meta, right? Those are the positions that are 6 figures or more. So those are my market movers, really, right? But here's the thing you got to kind of look at it also is how big are the biggest positions? So if I look at like a Palantir versus a Tesla, for instance, my number 6 biggest position versus second, well, Tesla's over 2x. So Tesla matters to the portfolio so much more. So if Tesla goes on an incredible beast run the next 6 months, the portfolio is likely going to run big. Now, another way to look at that is what's my biggest position? Well, it's Meta, but Meta's over 2x the value of Tesla. So now I got to think about this in terms of if I really need this portfolio to move, I really need it to be Meta. Meta is really the one that's really dictating the portfolio because it's $868,000 out of a $2.1 million portfolio, right? So Meta has to move. Now, am I feeling pretty confident in Meta? Yeah. I think their next quarter is going to be good. Guidance should be good. And everything should be good. So Meta could accelerate to a 550 to 575 number, right? And I still think Meta is going to $1,000. I don't think it's going to $1,000 this year, but I do believe Meta is going to $1,000 likely over the next 2 or 3 years. And so in order to get to 1,000, it's got to continue kind of this upward trajectory, and the next kind of numbers to take out is 550, 575. So I think that's going to help. I think in the back half of this year, the Tesla story gets better and better and better. So don't be surprised if Tesla, this position goes from about 318,000 to push to 350 to push to 375, something like that. I think I should get help there. Palantir, if they can get close to that 30% type revenue number at any point this year, it's going to be explosive for the stock. And if S&P 500 inclusion comes announced, that stock will make a big move. PayPal's a real dark horse here because PayPal, I haven't got any gains here. It's a $184,000 position. I haven't got any gains. So if this one actually starts to move and we see the stock head back to $100 and then north of $100, I mean, my gosh, is the portfolio going to be moving and grooving in that situation, right? Amazon still has another kind of, Amazon is going to have a fun time. Amazon's in an interesting period where the stock looks like it's ready to break out in an absolutely massive way. So I think the financials are going to be very impressive for this company. I think much more impressive than where analysts are at, especially as far as earnings per share. Keep in mind this Rivian stock price move here right before the end of the quarter is going to benefit Amazon in a pretty substantial way. Even though it doesn't actually benefit them in a direct way, it does in an indirect way to their earnings per share. And so I think Amazon's EPS is going to look really, really impressive. And so Amazon looks like it's one of the companies that's most well positioned for an absolutely substantial move here in the short term. Elf's kind of a wild card. The growth rates are insane, but every quarter people start to doubt Elf again. They're like, this has to be the quarter they don't come in. They come in again, report great numbers, and even if they take up guidance, 250's coming for Elf there. So my opinion is the public count's likely going higher. And I wouldn't be surprised if we hit 2.5 or above this year. I'm not talking in future years. I'm talking this year. I won't be surprised at all if I log in, in the next 6 months and this says 2.5. I don't think we're getting to 3 this year. I don't think. The only thing to think about if we get to 3 is if Meta goes on an epic run and goes to 600 to 650 this year. If that happens, then we're going to go to 3 this year. But it could happen. Meta's PE ratio is so low right now. Forward P's, if we look at 1000x and kind of averaging out analysts, we're at like a 24 forward P on that stock. But in reality, I think analysts are too low with their numbers. So I think the reality is forward P is probably 2021, which then you should say it should command in the 30s. That's the reality. And if Meta was to start commanding in the 30s for a P ratio, then that puts that stock, we can call it 50% higher from here. And so next thing you know, you're 750, right? But let's say we don't go that high. Let's say, maybe 30% higher for the PE ratio, which would, let's call it push to the high 20s, which is not a stretch for Meta, given their growth rates and how stable the business model is, to command something in the high 20s for a P ratio is not crazy. And so then you're in the 600s for Meta, right? So 2.5 I think is very comfortable. I'll see 2.5 in this portfolio at some point this year, but is it crazy to say 3? I don't think so, actually. I think it's actually a possibility. But we'll see how it all shakes out, guys, okay? Appreciate you joining me, as always. Thanks so much for being here. If you're looking to apply to join my private group, see all the moves I'm making in my $2 million plus account each week, as well as get access to exclusive weekly videos from me, as well as all my premium course curriculums, as well as the 6- and 7-figure Discord chat, apply with the pinned comment down there. Much love and have a great day.